Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. All right, so I recently bought shares of Redfin in my portfolio, and I added to my position a couple times incrementally as the stock continued to go down a little bit more. Um, and this Redfin's down like 95% from the highs, and it's not for no reason. I'm going to steal some of Tyler's bear case right now because Redfin had a terrible quarter in the third quarter, lost $90 million. Their gross profit margin is down, and the real estate market. I don't know if you've tried to buy or sell a house lately. It's just not moving. Um, I do think that there's a lot of light at the end of the tunnel. I think getting out of the Redfin Now business is a big part of the bull thesis right now. I think that will help to curb its losses quite a bit. They recently made the difficult decision to lay off a bunch of their workers. And those two things, I mean, the biggest money loser for them has been iBuying in recent quarters. So management says they expect to be profitable by 2024. I'm I'm bullish, and I'm taking that with a big grain of salt. But I like that they're focusing on what they do best. And what Redfin does best is try to disrupt the antiquated pricing model of real estate. There are a lot of tech-focused real estate companies. Even some of the old school players are embracing like online portals and touchless contactless listings and home tours and things like that. No one wants to compete on price, or no one wants to disrupt that 6% selling commission model except for Redfin. They still have a pretty low market share. They want to double down on their engagement with their app. Right now, they are a distant second to Zillow when it comes to user engagement, about 50 million monthly active users. I love the Redfin concierge concept that has really started gaining traction. That's pretty new this year. 24% of their home sellers that have homes priced over $500,000 are using this. And basically, it's Redfin's program to allow them to finance their moderate renovations to their home to get the maximum value because people want just move-in ready houses. I like that they acquired a big mortgage player. Their mortgage cross-selling is doing well. Right now, that's a very non-valuable part of the business because no one's getting mortgages. But in as the market starts to normalize, that could be a big needle mover. So I like that they are focusing on their core business. That seems to be a big thing in real estate, in technology right now. Zillow's doing the same thing, focusing on their core business instead of trying to be everything to everybody in real estate. And the rent business is kind of the last but not least thing. They acquired Rent.com out of bankruptcy. That is properties like Apartment Guide and things like that. And I think the rental market is arguably going to grow faster than the home market. Tyler, I know you're not a big Redfin bull, if I'm quoting that correctly, but why don't you tell us why?
Well, so there's part of me that says yes. The way that real estate is done traditionally needs to change. Unfortunately, if you look at the industry of real estate brokerages, you're not disrupting a hyper profitable industry, right? Like if you look at the businesses like Remax, Century 21, the actual corporate businesses themselves, they're not massive profit makers. They're actually kind of crap businesses when in terms of something that's investable. All the money's made on the agent side, and money goes into their pockets. So you're not like disrupting a highly profitable business. You're just profitable, trying to take money from profitable people and trying to make the unit economics a little bit better for the customer. Sounds great if you can do it in volume. But if the unit economics become to the point where it's not profitable, that's where it starts to get hairy. And there are a lot of questions on whether or not Redfin can make the unit economics of their business model work. And that's something that they have not yet proven. So far in 2022, and even in the previous year, they average about a cash consumption. So, we can talk about income statement losses, but cash losses on the cash flow statement, they average about $400 million per year in cash burn or cash consumption. And that's even before we start backing out making any considerations for stock-based compensation, which are costs, although not necessarily immediate cash ones that you put on the cash flow statement. So when you're burning through that much cash per year with the current business, there is legitimate questions whether or not that gap can be closed fast enough for it to realize all the things that it wants to do. Yes, getting rid of its iBuying is a good thing. It's going to unlock a lot of inventory that's going to probably free up some cash. It's going to improve its margins because its margins have been deteriorating consistently with its iBuying business because it's just a low volume. It's a low profit margin business compared to selling leads, making actual transactions on with its kind of excuse me, more digital offerings. So that's the thing that I'm skeptical that all of the things that they are offering and the way that they're offering it to the customer is going to turn out into a unit profitable industry over the long term. We shall see. But that's my greatest concern, and one that I'm not necessarily banking on happening soon enough for it to close those financing gaps.
Now, there are a lot of unanswered questions with Redfin right now, and I think you would probably agree that if we knew that they would be net profitable in 2024, this would be a lot more than a $5 stock today.
Oh,
The,
absolutely.
the problem is that, yes, they say they're going to be net profitable. They say they see a path to profitability, but most investors don't.
Right.
And even the really positive ones are like, okay, but now you have to show me. And that's kind of where I'm at. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.